Okay, today's the 28th of January, it's 9:30. Just going about the normal daily routine to set up shop. First thing I want to do is put in our opens. Off by a minute there. Important one is the Asian Open, and it's an approximate. This is when it jumps around the most. 4 o'clock on the chart time, 11 o'clock on clock time for Australia. Again, as I do, I just go through it and collect the things that I use. Obviously, each software package has its own. You do it on your own. Got them all. Green on the top. I'll tweak all these as we go. Red on the bottom. Major break. Just an unmarked zone. Use purple for my neutral colour. One of them. Red's just 1 minute break of structure. 5 minute break of structure. Caution. There we go, we've got a couple of markups for the purple. We're on the 1 minute chart. New all-time high this morning, who'd have guessed? Clearly somebody said something somewhere. So currently, technically we're on an up structure because it broke there up, and then if we zoom in a bit further, down there, it broke there. And again there. You can quickly look in on the 5 minute, you can see it's a down structure there. Broke. So really, if we go to 5 minute on our main chart, I can put that little fella in there. So that box at the bottom is a reversal full on, and you got that in there. Just using my markup as well to just review it. It sort of gets my mind into the rhythm of what I'm seeing. What am I actually seeing here? It's all about slowing it down and bring in my trading. Got to go up one more. We're at 450. It's 0.03. Take profit. We want to go cautiously, so let's see where we're at. Let's see what we got. I find, and it's my language, that I like to let the charts talk to me, and I'm asking myself mentally all the time, what's the market telling me now? What's the market telling me now? So to get a perspective here, that bear candle is a 33 pip candle. The one next to it is a 15.5 pip candle. And you know, it's now jumped, so I was almost going to put one on there, but it's already jumped 12-15 pips, and it's jumping straight into there, so it's jumping into a 25 pip range. That would have been a trade. Pull back a little bit. No, I didn't. What is a little tentative to kick the day off? That was a late entry, so not a solid entry. So we're really to reach back down for a little bit of liquidity. expecting it to sort of pop back up, but it's popping back up into a zone which is not supportive of this particular trade. I'll help it along a little bit. No, definitely get out of that. Again, we got it right in that block hole there, top of the candle to the left. for me to start trading, I got to get balance, and that's not a good balanced start. That's a struggle start, and got to do better than that. So just take time out to settle. And that candle broke, sucked up, and it's like, get on board. basically cracked the top of the candle by side. It's an outside. Not good. Okay. Yeah, 3 seconds. Just quietly concentrating here, reading the behaviour, letting it talk to me. What is it telling me? take a little lick in there, just get out. We've got to build back up. We're miles behind. So really conservative now. We're at the bottom of a zone. It's broke. No, wrong. That's not right, but anyway. Fuck. That's not good at all. That's it. 4 seconds, 1 second. Oh, no. Okay. We go to the 5-minute chart. We can see that it's taken 4 candles, and I can't break this candle here. Still could crack any time. It's coming into the open, and you've really got, it's a struggle down, so I reckon it's looking for liquidity to pop up. That's what I'm sort of hoping for at the moment. It doesn't appear like it wants to drop below that. You go to the 15-minute chart, it's really just a pullback, breathing. That's not great trading, but anyway, disappointed in the morning start. I just haven't settled. I'm all over the shop and not doing what I'm saying I should be doing, being conservative. It's a bit disappointing. I'm way behind, so I'm just waiting for this to play out. It doesn't appear to be any enthusiasm for the short side, but there's no liquidity to drive it long either at the minute. We're at 10:30, so we're 30 minutes off the Asian Open, and we're still 15 minutes out from seeing a reversal potentially, but who knows. You just keep getting these mini outside bars. This one's outside and broke below, and it's borderline broken above now. There it goes, it's broken above, but it's sort of not giving it direction. We got a new high from the open this morning to now. It's already hit a new gold high, which is pretty amazing. Okay, so we've broken long again now. Broken long a second time in here. Testing these in here. Okay. It's broken that one in there. I really want it to break that one there if possible. Drawing back a little for liquidity. A mini weigh and micro weigh. Got to trade this out. I don't got to do nothing, I suppose, but I like to trade it out. It just got all the hallmarks to drive up. And you look at the 5 minute, you got this in here, it's pulled back. Got 2 minutes left on the 5 minute candle for another one. $15 minute, same deal, comes down, it's broken here. Playing off, I've got this marked up off the morning open underneath this here. It's going to go. I'll put into all that in there. Got to break through that little header. It's going to go. Let's not get ahead of ourselves here. We got, what's that, 15 seconds on this one. Like all these wicks in here, good sign. Still talking to me, telling me it's got that long feel about it. There we go. What can we get out of this? Okay, that's popped. Okay. Get your whoopee on. Get your groove on, baby. Here we go. Pop through here. You can see as it hits these points, it immediately hits little pockets of liquidity. The more it hits it, the less liquidity there is in that spot. You can see it here on the 5 minute, up in here, right there. Feeding up into it. All wicks to the bottom, thank you, keep coming. It'll strike some resistance in here. wick, pop. Break. Okay, 30 seconds to go. It's just a dance that it's just going to keep doing. It keeps doing that dance. Looking for liquidity, little drawback, push forward. Little drawback, push forward. Little drawback, push forward. It's magic to watch. It's just going to keep doing it all the way through. We now got this little spot over in here. Where does it go to? It goes almost exactly to that join in that there. And it just repeats itself. Looks to push through. Same. And find that there's a little mini void in there. I'll pop up into there and then push through, and then it'll find resistance up in the area above. Here it goes. Again, if we draw the line from there to there, it's exactly wick to wick. It's going to join up the wicks. There's the wick there. There's the wick there. Just keeps coming. It's going to find that resistance, whatever it found over here, finds over here. I'll have a little breather. It'll keep eating into it. And off it goes. We've now got long structure, broke structure on the 5 minute. Candle in here. Could come back for a bit of liquidity back into that space just there. In here. And then go again. That's okay. That's basically this spot just here. So if we extend those over to there, as we can see on the right hand side here, the pink line, we've got the Tokyo Open creeping in. And again on the 5 minute, you can see in the 5 minute there, I just put the high in. So that's a new high there. We've got it coming back here, back into this zone. But we now have long structure. signs of caution, because it's got that little wobble in here. Then we have break there, and it broke up there. What we're looking for it to now do is push up. Get this next candle or the one after to break its previous candle, we're in really good shape. Seconds ago, good stuff. We want it to break this candle here. It's solid. Got 7 seconds. Okay, new candle, here we go. Oh, nice. Nice little pop there. What's the market telling me now? We've got an up structure, we're feeding into the open, it's been up all morning, it's made a high, you know, just watching it here. Now it's still doing a little dance. It's not strong, it's not a big drive, but that's what it's telling us. Four seconds, here we go, new candle. It's okay. There we go, keep coming. I've got to send out that positive energy vibe, trying to help it along the way. There we go. Popped above it, it's doing all the right things. Just keeps moving. That's it. Obviously we're going to hit the resistance. I can't call it resistance. We're going to hit a pocket of liquidity in here, about there, and we're going to see what it's going to do. Again, quick look at the 5 minute. You see it's moving up there. Doing all the things it should. 15-minute. Same. It's reaching that point. It's going to be questioned there, which is this point in here. Same. Just watching it here, you've got this little, all this in here, it's just feeding into that, eating away at it. Take all that. Now we're just going to start being conservative. Oh, it should have been all the way through. Thanks for coming. And this will go all the way. That'd be right. So I'm going to start doing back to it, and we'll start trading this structure. You've got a little caution zone just there. And if you will, all of this area in here really all of that is in a caution space because you've got all of this over here and you've got the actual liquidity pool sitting up in that box there. Again, bring that across there like that. Watch it dance, and then if you have, we're watching the wick there to there. So the top of this wick here, this one, we'll see where it goes to there, whether it does it break that or does it just meet that and move off. Here we go, feed up into that. That's away. Bring these in here. You see, once it gets going, it just jumps through those little zones. Perfect. Now we need a pullback, we go long again. We wait for the pullback. We mark these off. Top of it there. Bottom of it there. Bring them in. It's cleaned out that caution zone. Now it'll look for liquidity to punch even higher. So bottom of the zone there. Top of this one, guys. For me personally, it just keeps repeating itself, and you've got to see the pattern, look for the pattern, and it's there. You can see it, you can find it, and when you see what you see, trade it. Recording my own trades and talking myself through them like I am here really assists in, one, you can go back and review your trading, and it's really important to try and work out what you're thinking, like what's actually going through your head, like what's the voice saying. And sometimes you need to say it out aloud to really reinforce it to yourself, to override sometimes not necessarily positive thoughts are going through your head. And for me, the story of liquidity, I can repeat on any time frame, and it tells the same story. The same thing happens over and over again. And as soon as I get out into a speed wobble, where I have been this morning, without talking it out aloud, I really constrain myself into what's possible into what I'm trading. And even those two trades were a jump on because I saw it going up, so it's got to go up. That doesn't serve me to do that. I've got to wait for the pullback and then get on board. I'm aiming, my intention is to be on the right side of the V. So the V is either a inverted V down for short or a normal V for a long. I want to be on the right hand leg. And all too often I get in too early and it crucifies me. And it's simple. Wait for the right hand side of the V. You know, this has come down, look for a little liquidity for its continued drive up. We're getting close to the Asian Open, right? And we're going to get a bit of jump around and it's going to drive up. It'll be a long day or a long session. And what we've got to do is look for the right entries. And like that candle there is just jumped down. It's about, what was that one? That was, 30 odd pips. And this is not uncommon for it to do this. And I'm just in too high, too early. Too early means you're too high. Either short or long, doesn't really matter. It hasn't talked to me. It hasn't said get in that sense. And so I get exposed for no reason. And it's poor trading. It's me not executing what I'm attempting to do. Somewhere down here now is where to get in long. There you go. What's it doing? Well, it's just the open. That's jumped 30 pips. Now I've got to get out of its road while it does its thing. Oh, 2 minutes before the open. This is what creates stress in trading for no reason. It's just hit that liquidity pocket. Now it's been fully impacted by that liquidity pocket. And the open. I'll happily go down here and get out of its road because I believe it'll bounce up. And I reckon it's gonna. It just makes trading so much harder for no reason. Here we go, 10 seconds. There we go, there's the open. What are we going to see? Keep score on pips, baby. And push to the high. And push to the high. It'll come. Here we go. Keep going, keep pushing. It's like being at the races trying to ride the jockey home. Okay, it's looking for liquidity. Testing itself out. Guys, come on. Get up there. Get up there. You can do it. You can do it. You can do it. That's it. Get up there. Get up there. Get up there. Get up there. Beautiful. New high, people. New high. There we go. Look at it fly. Got wings. It's off to the moon, Garvin. Yeah, time to just sit it out, watch what happens, look for an entry, keep marking it up. There's our little zone there. And I don't have to keep sort of explaining. I know people can see it. It's like we're in no man's land now. It's like, what's going to happen up here? I don't know. Who's bought it? I don't know. So the only way that this can work for me now is just continuously keep trading my methodology, my system, what I see, so to speak. It's like I've just got to keep going. I'm trading structure on a 1 minute time frame, and my structure is denoted by the pink line, which is the 1 SMA on the close. That's all I'm doing. And when I don't do it, as you saw in the beginning of the sesh, I get a massive speed wobble up. And then I'm trying to guess it. And it doesn't work. So you got 27 seconds of this candle. Again, what's it doing? It's looking for liquidity. Is there more buyers going to come up behind it? It's gone soft. Grab a little one. And go out. It's going to keep going, probably. But then, you've got a full-on caution zone in here. Why? Because you've got an exhaustion candle, which means that there's a void just there. Is it going to keep going? Could. Might not. Someone's going to see an opportunity and buy, jump in, and off to the races it goes again. You'll see how it just jumped then. It's just jumping through that. It's matching it off. Come back into this little liquidity zone here. What's it doing? It's looking for liquidity. Will it do it? Who knows? Can I put a buy on? Yeah, probably. Yeah, little buy would have worked. Get in, get out. It's already done 30. It's already done 30 pips there. Look at that. That candle there from top to bottom is 120 pips. But it's telling a story. This one here on this side is jumped up to be just not quite 140 pips. Nice, 30 pips. Thanks for coming. So that just scored us 31 pips, $9. That's simple. We followed it, got down here, couldn't go, pull back, bang, jump in, get out. Now we've got to break a structure. Find some of my lines, get my lines back into the groove. Got a little break of structure there. And it's feeding back into this little pocket down in here now. And you see all the big wicks in there. And that candle just dropped 145 pips. We've got 2 minutes 30 left for the turn of the 15 minute. Remember, we're on a short structure, so all technically correct. It's had a big push up, needs a breather, Now what's it going to do? I think this is going to reverse for a bit. Not so much it's gonna, but it's a shape. I'm trading the short structure. It's gone up to, and again, probably too early to be fair. It hasn't reversed, but it's in a short structure and it's fed into that zone and it's just pushed past it. But that hasn't broken structure yet. This is just going up looking for liquidity. Let's get these little poppies out of the road. Oh, didn't move that fast enough. Here we go. Just too early. again, that trade, I managed it well, but too early. Got to wait for this turn in here, and then this trade's perfect. That trade's perfect. A little bit too early. Way too early. But you got to read it. Keep reading, like structure. What's it doing? Sorry, crunching ice. It's pretty hot here. And again, we're now whatever it is, 20 past 11. So we're 20 minutes past the zone. So now we're back to, we got out of this little funky space over here where it opens. And what's it doing? Well, you got a down structure here at the moment. This one down broke there. It's come up to make a lower high. You got a lower low, but you got a higher low, but a lower low. So we're in a little mini down structure here. And it's really like we're at $5,190 odd an ounce. So what can you lean on? The only thing you can lean on is what your strategy tells you to lean on. Like if you look at it in here, that green box is the top of the high of the morning session. It opened here and it's gone to here, and during that time it swung 432 pips. So what is it going to do? The 5 minute, it's like, there's your 5 minute break of structure. 5 minute break of structure's down here. It's still in a long structure. So again, got to just keep caution on these things. Just keep observing, keep calling it, keep talking to it. That's what I have to do anyway. That's what's there for me. And it's like, well, where do I go here, long or short? Well, I have to play it out. I have to watch it. At the moment, it's that sort of funky sideways stuff that it's not in the groove. It's not really talking to me very well. Well, I certainly can't hear it anyway. And if we look at the 5 minute on the bigger chart, big push up, broke over here, there and there. If you look at your base markup, I mark up the 5 minute, there's your little zones. Breaker structures in there. Hasn't done that. Hasn't even formed that up properly yet. It's 55 seconds for the end of this candle to form that low properly. So there's the next high up there. So if you look at a liquidity zone in a 5 minute, there's your liquidity zone. It's broken into it a couple of times in there. If you go back to it in here, it's broken into this liquidity zone a couple of times and then sucked away, and it's right in that caution where these two candles, the bull candle went straight through it and the bear candle went straight down through it. So what's there? Who knows? We're speculating because we're up in no man's land. nice. I guess the point I'd also like to reiterate to anyone who ever watches this is like I see what I see. The experience of what's occurring for me is what I see. I trade it. And my underlying story is the same. It's liquidity. I can keep talking liquidity over and over again, and it's the same story, but it's not a strategy. So I'm trading a model, if you will, of I'm trying to get on the right hand side of the V. It's what I see. I see that there's points where there's wick to wick, fills the gap. Sometimes it pushes down and needs more liquidity for it to react. When it does that, it'll go back to the previous little liquidity zone. I see all these little spaces. That's a liquidity zone in there, and so on and so forth. These are caution zones. That's a caution box in there. It's punched through that green there. It's got to come out of there and push back because it's punched up through that, so that doesn't exist anymore. Caution underneath these two wicks in here. This is the all-time high. And what's it doing? It's like, it's strong. The market's strong, but it still needs to breathe. It still needs to kick back, go for a breather, find liquidity, and then push on through it. So if we go to the 5-minute chart on here, you can see it, how it's behaving. Right now, I'm just being consistent. I don't trade the 5-minute. I look to the 5-minute for context. That's all. I rarely look at the 15-minute because it doesn't tell me anything. How does this tell me anything if I'm on a 1-minute chart? All that 5-minute does is just give a higher level context, which means it's still strong up here. It's punched down in here looking for liquidity and sucked straight back up, and all it did was form more structure. Done the same thing again in here. Can't hold it down. So what's it do? It's pushing up. Where is there to trade? Trade with great caution. Got myself into trouble big time with a really piss poor start today, and $180 in the red. As I've gone through my zones, I've changed over here. I've changed my trade size, and I went down to 0.01, 0.02, then down to 0.01, and then I traded it back in accordance with the trade size of 1% risk on 15 pips based on my bank account. Well, I'm back up to 0.03 because I'm over 450. So we're off to the races again. Now, if I put a long on up here, cause it's going up, because I reckon it's going to keep going. Well, all that does is put me in no man's land, and I'm not trading a high expectancy trade. I might jag it, and from time to time, I think I jag them, but that's not great trading, because I've gone high. If I've gone long here now, where am I now? It's pulled back. And in that particular case, it pulled back 22 pips. So yeah, probably when it pulled back, I could possibly put one on, because then I've got 22 pips where it's already been. And I look to the left. Well, it needs a breather. It's coming back to, if I keep marking off my liquidity zones, it's going to come back to there, potentially looking to get drive to go up. And there's another one, it was over there. Alright, so here it comes back. Well, now I'm screwed again, because I've gotten in up here. If I had gotten in up here, I'm screwed. Well, now I can go long somewhere in here. If it holds, it doesn't, it's sort of held, but it hasn't really held yet. It didn't start turning and going up. But so can I go short? Well, no, because I'm on a long structure. See, it held how strongly we're about to find out. And now, if I go long, I've gone long here, and if I go, I'm inside the previous candle. This is not looking solid, so I want to get out now. So I move my stop, my take profit in. Still punched higher than the previous candle, which is a great sign, and it's struggling. There we go, we're out, and we got back what we lost on the first one. So if we go back down to the bottom, that was a 20 pip trade, made $8, lost 17 the one before. Like, didn't hang on long enough. But now, what do we got now? Let it talk, just let it talk, let it keep talking. Like, it's, you know, probably now it's getting close to being a good time to step away for a bit or give it up for the day. Because again, like, you've got a funky little range of about 100 pips where it's up, down, up, down, up, down, you know. Let's see where we stand today. I'm going to tell, again, I'm repeating what everybody knows. The more you rush it, the more you screw it up. The slower you go, the faster you'll get there. So why rush? What am I rushing? Who am I rushing? It's only me that I'm rushing. And that's what just got me into so much trouble this morning for no reason. And you saw really ordinary performance today for that very reason. Just rush, rush, rush. And there's the current performance at the moment. We've made $23 profit, 147 pips, 9.8R, started at 460, now on 480. It's a 5% return. I made 1,350 pips and I've lost 1,200 pips. My average win is $8.77. My average loss is $10.50 or 60, and average wins 30 pips. So there's been some big trades in there, but I'm down on 56%. So rushing it really has not added any real value at all. And if we go and check in over here, it's a smidgen behind 2270. Just bring that up to speed. It's 23.70 there. 8.9R. Right, done 80 trades and we're scratching on 56%. It's pretty ordinary. Where in here you got 71 and this one's 80. So the slower you go, the faster you get there. It's like oldest rule in the book. And there it goes back again. Oh, here we go, new high. Roughly 11.37. No, not quite. Got to get this dead accurate, folks. Best I can do that. Take a high, take a long. Like, why? Take a short? Well, maybe that just pulled back 30 odd pips then. So this drive from that candle to that candle is 98 pips. So we got big numbers here. And again, what do you see? What are you seeing that you're trading? You know, does it meet your model to put a trade on? If anything here, I put a short on. And if I put a short on right at the top there, it's basically got a crack through into the second candle with my 30 pips. These are just not great conditions. Well, they're not opportunistic conditions, I don't think, anyway. Yep, probably would have pegged 30 pips there, but at what risk? $11 pips, $4. Okay, again, just too high a risk of trade. It's crazy. Way too risky. Fuck, come on. No, this is how you lose your account, people. Risk is way too great. Made that statement and fucked myself up. Completely fucking dumbass. That's bullshit, people. That's fucking stupid trading at its worst. Fucking hell. Cannot believe that is so fucking dumb. Extraordinarily stupid. Cannot believe how fucking stupid that is. No, come on. Oh well. Dumber than I thought I was. Again, reading it, we've got a little breaker structure, mini, micro. We've got a 5-minute where are we here? The 5-minute. You can see up here we've got a little bear candle starting to form. or buying push was on. Can it keep going? Let's fucking hope not. Got to breathe at some point. You know, over here it made a new high and it pushed back 260 pips. We're looking for 180 odd pip push back. It's just not going to have the momentum to keep driving, but it'll drive further than I can stand it, which is the old story. We need to see a couple of bear candles break the previous candle. As soon as you see the bottom green down here, we're out of it. It'll be somewhere in the middle in here. Just don't need to trade like this, people. This is just, you put one on and it didn't work, get out of it. I didn't get out. It's like, well, damned if you do and you're damned if you don't now. We're coming up to midday, so hopefully it's lost its momentum for the day, but that's wing home, what do you call it, or on a wing and a prayer. I was like, yeah, that's dumb trading. Language is so important. See, on the 5 minute single candle, it's got to break this one in there. Let's put a little marker on that. If it breaks that point there, then it'll fall down through that space below to where we got in. We got a chance if it can break that, which it just did. Broken into there. Oh, keep pushing down. 30 seconds to go here. Buy liquidity's having a crack. Okay, 17 seconds to go. We want to see this push. Keep pushing down. It's okay, keep going. 1 second, new candle. Break it. Here we go. Keep pushing, people, keep pushing. You're too high, you'll get nosebleed. Come on, down you come. Keep going. Keep going. That's it. There we go. Keep going. One more line, come on. You can do it. Here we go. Here we go. One more line. One more line. Yeah. Enjoying Pepperstone Sea Trader. Fucking am now, but fucking hell, you bastards. What's this shit? Let others know in a review. I'm fucking trading. Fuck off. Oh, that'll do me for today, folks. That's a perfect example of what not to do. That was fucking silly. Silly trading. And it's like, that's what breaks your account. So, wow. Talk about dumbass. Man should be taken out the back and slapped. Anyway, we finished up with $57 today, so, and here's the bastard coming back, right? And it'll come right back to this liquidity zone. Again, the story just keeps repeating itself. You know, it comes right back to the tip in here, finds a bit of liquidity, starts to stall as it gets closer. You know, there's the new high up there. It's $5,225. Wow. Okay, so stand by, I'll just give you a summary update. Let's see what we got here. One does not need that sort of stress in one's life. There is no value in that whatsoever for anybody. Just got to work out which is which here. 20. Today's a great example, seriously a great example of what not to do. And what to do at the same time from the perspective of just got to keep chipping away at it, keep chipping away. And it just keeps telling the same story. Like, if we just shrink this up a bit here so we can see the whole screen, it's come back down here to liquidity. Yeah, it doesn't fully match up, but that's okay. Like, put that line in there. It's right back to where it comes from. Here it comes back again. Went up. Where'd it go up to? Went up to there. Wick to wick to wick. You know, it's sometimes the wicks, sometimes it's pockets. There's the wick. There. Could it be this one? Yeah. You move that one to there. This one went to that one. And this one will come down in here and it'll spin its wheels down in here for a while till it works out what it's doing. Well, hang on. What was I doing here? There we go. Move this one across. $57, 15R. We're looking at 12% return on starting 86%, 86 trades, only 56%. So we're down and we shifted out a little bit on the average. $9.60 win, $11.20 loss, pips 31 versus 35. So a bit to go there. I'll save this where it needs to get saved. Dun-dun. Okay, and just to bring up my old mate Zilla. It's just refreshing itself. So today's trading, we've done 15.1R as I just said. There's been 86 trades. There's been 230 odd pips made. And we've made $57. This week's $314. So still going in the right direction. Not the right way to trade, folks. So we can do better than that. Do a lot better than that, and a lot more stable, relaxed. Don't need to be like that. So there we go. Account finished at $517. Thanks. Hope you enjoyed it. Hope you got something out of it. Please don't always do what I do. Do what you think you should do. All the best.